Hello traders, welcome back to the new weekly forecast for the trading week starting on June 10th. Now in the current week, we had NFP numbers announced from the US and they have given way more than the expectation in terms of new jobs. They have given 272,000 in comparison to 182,000, the expected numbers. So this brought back the dollar buyers in the market. And based on the technical chart setup in my previous video, I have already explained that I am expecting stronger dollar in the coming days. Now, in the coming week on June 12th, we have interest rate announcement from the US and we are not expecting any change in the rate of interest. In fact, the market is not even expecting the change of interest rate in the next policy, which is scheduled for July end, 30th or 31st July. The first rate cut expectation is somewhere in September, which means dollar may remain stronger in the coming weeks and months, putting pressure on the major currency pairs and gold. So without wasting our time, let's dive directly into the charts and let's see what are the promising setups for the coming week. So let's start our technical analysis, and the first currency pair in the list is Australian dollar versus US dollar. Now as US dollar is gaining strength and the commodities are under pressure, so definitely AUDUSD looks bearish in the short term. Now let's see what's on the charts. So here I'm starting from the weekly time frame. I just need to clean my existing drawings, and based on the weekly chart, if you notice here we have a sequence of lower highs. So I'll explain. So based on the weekly time frame, we got high followed by lower high, again double top, lower high, and the new lower high. Now from the bottom we have a low, higher low, and higher low. So definitely it's a triangular formation here. So I'm going to mark the triangle here. So taking the trend line and connecting all the highs. I'll join the lows as well. So here we got the triangle. So currently AUDUSD is bouncing lower from the top line of the triangle. So this is your resistance. Now moving to daily. Now based on the daily time frame, if you notice, we had bullish divergence at the lower end of the triangle. Now I'm talking about lower low formation coming with bullish divergence, and we got the breakout structure. Now after breakout structure is done, market is expected to move lower to complete the correction. Now because it's a triangular formation, there is a high probability that the sellers may push this currency pair back towards the lower triangular boundary, and then in the coming days or weeks it may bounce back up. Now definitely if you zoom in, you'll find that MACD histogram is also right now running bearish. Now here we have double top formation, we got high and a lower high formation, and MACD histogram is also bearish. So daily is looking bearish right now. Now we have the currency price has already crossed the major support zone. So this support is now broken. Now let's go to 4-hourly time frame, the next lower time frame. Now based on the 4-hourly time frame, we got the sequence of high, lower high, again lower high, and lower high. Now it has broken the support and it has formed a lower low as well, and I do not see any bullish divergence coming into play, which means the sellers are in full control. So I'm going to plot fib retracement starting from the lower end of the previous bullish cycle and connecting to the higher end. So I'm plotting Fib retracement here, and I'll also apply Fibonacci extension in the downward direction, starting from the highest point, joining the first low and the lower high. Now, since it's a bearish extension tool, so let's make it red. Now, based on the Fib extension, the bearish Fib extension, currently the price has reached exactly Fib extension 100%. So this is the level of Fibonacci extension 100%, and the next level in sight is FE 1.618, which is also confluencing with Fib retracement 61.8. So I'm going to mark this confluence of the two Fib levels as our target. So this is going to be our bearish target for AUDUSD. Now, does it make sense to sell from the current price? Definitely not. So when the market is going to reopen on Monday, I'll wait for the push up, the pullback, and then I'll wait for the next move down. So this is the plan for AUDUSD. Let's go down to the next lower time frame, that is 1H. Now, based on 1 hourly time frame, I can see that current price is hovering at Fib extension 100%, and I'm expecting on Monday that the buyers will take it back. So this will not be the bullish trend. This is in fact going to be the correction in the downward move, and I'll look for joining the sellers. Let's move to 15 minutes. Now, even on 15 minutes time frame, I do not see any signs of bullish divergence, which means there could be some short-term pullback, but no trend change and continuation in the lower direction. So this is the plan for AUDUSD for the coming week. Now, the next currency pair I've taken is pound versus New Zealand dollar. Now, pound is definitely looking way stronger than the Pacific duo. Now, the Pacific currencies are highly correlated with the commodities market. Now, since dollar is getting stronger and commodities are getting weaker, so I can see that the Pacific duo are under pressure. Pacific duo means Australian dollar and New Zealand dollar. Now, I need to clean up my chart, pound New Zealand, and here I'm going to set up again from the weekly time frame. Now, based on weekly time frame, let me zoom in. The lowest point visible on the chart is here at the bottom. So this is going to be our starting point for plotting the Fib extension, and I can take the first major high. So this is the end of the first bull run. Now I'll be using Fibonacci extension starting from the lowest point. Based on the Elliott wave principles, this is going to be my first high, and I need to connect with the higher low. Done. So here I'm going to zoom out now. Now if you notice, pound New Zealand buyers, they managed to take the price higher than the first Fib extension level. So 2.06 is the major level now, and the current price is exactly taking support at this Fib extension level, and the next target in sight is Fibonacci extension 100% of the weekly bullish cycle, the first bullish cycle, so 2.19. Now let's move to the lower time frame, that's daily. Now this is the major Fibonacci level, and the pound New Zealand currency is taking support exactly on this level. Now if you notice, we got the bullish divergence, we got the break of structure, higher highs formed. So this was your first push up, correction down, second push up, correction down, and the support is formed exactly on the Fib level. So we are expecting a bullish run from this level. Now I'm going to zoom in and I'm going to plot Fibonacci retracement from this low, started from the bullish divergence. I'll take it to the first high. So I've connected I've connected the lowest point after bullish divergence and the first high, and the retracement was exactly to 61.8, the golden zone of Fibonacci. This is the first Fibonacci retracement, and it's textbook condition here. Now the second Fib retracement should be plotted on the second bull run from the lowest and the highest. Now again, if you notice, I've connected the lowest and the highest, and the retracement is precisely on 70 to 80% level. And not only that, the retracement ends at 70 to 80% of Fibonacci level. I'm going to zoom in and show that we also got the buyers back in the market, because two lows formed, consecutive lows, lower low with bullish divergence on histogram and MACD lines as well. So strong case for the buyers here. So this is going to be your major support. This is going to be our major support, and I'm looking for the bullish plan. So to derive the targets, I'm going to apply Fib extension on the two bullish cycles starting from this level, the first level where we plotted our Fibonacci retracement. So I'll be using Fib extension. I'll connect the lowest, the first high, and the higher low. I just need to change the color of the extension lines to blue to differentiate, and I'm going to apply the second Fib extension on the second cycle and connect to the higher low. I'm again going to change the colors here, maybe this one here. So now the first resistance in sight is at the 61.8 Fib extension, that is 2.09, followed by 2.11, and the ultimate resistance will come into play at 2.12. So these are your upcoming target levels: 2.09, 2.11, 2.12, and 2.14. Let's move to 4-hourly chart. Now based on 4-hourly chart, we got massive bullish divergence here. Also, we got bullish divergence on the last leg of this wider divergence, and we got the breakout structure with a massive breakout, strong breakout. Currently, pound New Zealand is sitting at a major resistance level. So on Monday, when market is going to reopen, I'm expecting some short-term pullback, only short-term, and then continuation in the upwards direction. So the plan is to buy on the dips. Moving to 1-hourly chart now. Look at the 1-hourly chart. Massive breakout, and right now we are at an important resistance point. The next one is here. So do not buy at the current price. Wait for the dip. Wait for the discount. Now based on this resistance, if you notice, pound New Zealand has created two highs with some weakness here. So it may print a few more highs with bearish divergence when the market is going to reopen. Now this should be taken as an opportunity to buy, because I'll be waiting for the price to move down, let the correction be completed, and then I'm going to join the buyers. So the support level is here. I'm going to plot the Fibonacci retracement, which is going to be imaginary, because right now I do not know whether this is the current high is your turning point or not, whether it's a pivot point or not. I'm just imagining that the current high is your pivot and market is going to turn lower from this level. So I'll plot from the lowest point and taking to the current high. Now based on the Fib retracement, I'll be interested in buying once pound New Zealand drops below this line of 50%. So anything below 50% should be taken as an opportunity to buy, and I'll be plotting long position, assuming that we are going to enter buy at this level, stop loss below the major zone. And let me move back to 1-hourly chart to have a better view. And I'll be using the first level as 61.8. So we'll be making at least 1.6 times. And the next major level is at 2.11. And I'll be protecting my trade with a stop loss below this major support level. So we can easily make 2 to 3 times. Our risk and reward is amazing if we get into the buy setup for pound versus New Zealand. Now the next instrument is US dollar versus Canadian dollar. Now because US dollar is getting stronger, USDCAD has a bullish setup. Now moving to weekly, I need to align my chart and I need to clean my chart. So here we go. So right now I'm going to zoom in on the weekly time frame, and this is the lowest point, followed by higher low, higher low, higher low, and sequential higher lows on the chart. Now we got a range here, a sideways range, and I'm going to plot Fib extension on the first major bullish cycle. I'll start from the lowest point, I'll connect to the first high and the higher low. So I just need to do it once more. It wasn't placed properly, so I'll connect from the lowest point, I'll connect to the first high and the higher low. Done. So right now on the weekly time frame, USDCAD has taken support at Fibonacci extension 1.618. So this is the major support level, and the next major resistance is here at the top of the range. So I was talking about this sideways range on the weekly chart. So USDCAD is progressing fast towards the top of the range, the sideways range. So 1.3889 is going to be our first target. Now let's move down to daily chart. Now based on daily frame, we got the reversal from this Fibonacci extension point, and we got the sequence of higher lows. So this is your first high and higher low in place. I'm going to plot one more Fib extension on this daily latest bullish formation, connecting low to the first high and joining the higher low. We just need to use a different color to differentiate the second bullish extension cycle here. So here we go. So right now USDCAD has crossed FE 100%. The next major level in sight is 1.618, followed by 200, which is exactly fitting inside the major resistance zone. And I do not see any signs against. MACD is definitely bullish without any signs of bearish divergence. Now moving down to 4-hourly chart. Now here we have our first bullish divergence on the lower time frame. This is lower low formation with bullish divergence on MACD lines and histogram together, and this is your first higher low followed by the next one. So I'm keeping this low as my invalidation level for the buy trade. So in case USDCAD falls below, the level of 1.3665, so we need to replan our bullish setup. So this is going to be our invalidation level. So I'm going to add this level as invalidation level. And the target is 1.3889 or 1.3890. Now, is it good to buy at the current price? Definitely not. We'll be waiting for the discount. So after this massive rally, which started on Friday after NFP announcement, now we'll be waiting for price to move downwards, most likely towards this FE 0.618. So we can plan our buy trade around 1.3703 or somewhere above 3705. I'll be expecting entry here with the stop loss just below our invalidation level, and our first target is going to be 1.618. So I'll be making the risk and reward of 2.5. Amazing setup. By risking 1%, I'll be aiming to get 2.5 back. And moving down to 1H, no signs against. Again, it's forming higher high formation without any bearish divergence coming into play. So daily, 4 hourly, 1 hourly, all time frames are aligned, perfectly aligned and synchronized in the bullish direction. Now we cut the low, and new higher lows will be formed here. No bearish divergence coming into picture. 15 minutes, again bullish. So I'm expecting, when the markets are going to reopen, I'm expecting one more push higher with bearish divergence on the lower time frame, like 15 minutes, which will bring back short-term correction. I'm expecting to join the buyers around 61.8 and to enter into a buy setup with the risk and reward of 2.5. And the next is gold. I'll start from the weekly. Based on weekly time frame, again I have to clean my existing drawings from the chart. Now based on the weekly time frame, the long-term view is still bullish. I do not see any problem for the long-term buyers. Now here is the lowest point on the weekly chart. I'm going to connect with the fib extension in the bullish direction. So we reached exactly FE 1.618, and once market reaches 1.618, there is a high probability of short-term correction, and the correction could come back to FE 100. Worst case scenario, it can also come back to FE 61.8. So I'm expecting gold to complete this correction. Our first downside target could be FE 100, that is the price level of 2200, and then continuation higher. Now it makes sense because I'm expecting stronger dollar in the coming weeks and months, so which means that gold may remain under pressure for a couple of months. Now moving back to daily. Now based on daily, we had spotted bearish divergence long time ago, and the sellers are back in the market. Now this is your rising trend line for gold. The buyers created a new high with bearish divergence here, which means weaker high, exactly on FE 61.8, and the sellers have created lower high. So first push down, temporary correction, and lower high formed. Now it's moving downwards. So this is the plan for gold. I'm going to apply Fibonacci extension in the bearish direction on the daily frame. So connecting the highest point, first low, and the lower high. I'm going to change the color to red here. So if you notice, Fibonacci extension 100% is at 2278. On Monday, I'm expecting gold to reach 2278, bounce back, and continue lower to complete its corrective cycle in the coming days. And the first level in sight is 2204. And daily chart is definitely looking bearish without any signs of slowdown in the bearish pattern. MACD is bearish, no bullish divergence in sight. Moving to 4H. Now the 4 hourly chart is also 100% bearish. I can see the pattern of high, lower high, again corrective push up, completing the correction until the previous major resistance zone, got rejected after NFP news and instantly crashed, and it is going to complete the first target of 2278 very soon. Now we can expect some short-term bounce, so do not sell instantly. Wait for the correction in the upward direction, maybe towards 2316 or slightly higher, and then join the sellers. We can also apply a falling channel here. So I'll be using parallel channel, connecting the highest point and the lower high, and joining the opposite end. Now since it's a bearish channel, let's make it red. So gold may remain channel bound in the downward direction for some weeks. So this is the projected pathway for gold. Moving down to 1 hourly chart. Now even on 1 hourly chart, I do not see anything for the buyers. Massive crash from the top end of the channel to the lower end. So right now it is at the lower end. It may bounce, create one more low, completing the level of 2278 Fibonacci extension with some bullish divergence coming into play on the lower time frames like 15 minutes or 1 hourly. Then we may expect some bounce and continuation lower. So please be patient on Monday, wait for the bullish divergence to be completed, let gold make some short-term corrective waves upwards and then join the sellers. 15 minutes, again we are at the lower end of the parallel channel, the falling channel, bearish divergence on the top, bears completed, textbook condition, wait for the Fibonacci retracement and then join the sellers. So the plan is clear for gold. Sell the rally only in the short term. Higher time frame, long term picture is still bullish, ultra bullish for gold. No change in the long term view. Now I've added one crypto instrument for the week because it has a promising setup. So this is called STXUSDT. I'll start from weekly. Now I'm going to clean the chart and explain the setup, the technical setup. Now based on the weekly chart, it has formed high, higher high and a new higher high. And the last two highs on the weekly chart, they have no bearish divergence, higher high formation. If you notice from this high to the latest high, again higher high formation. So no signs against the buyers on this crypto stacks. So I'm just connecting from the lowest to the first high to check at the February retracement. So again, first rally up, corrective push down exactly towards Fibonacci retracement 80%. Now it has rallied. So this is first leg up, second leg down, impulsive third leg, and this is your fourth leg, and I'm expecting it to rally again. I'm just going to apply Fib extension on the first and second leg. So here I'll be connecting Fib extension on the lowest, first high and the higher low. So this bullish rally completed exactly on 3.618. Based on candles, you see stacks reached exactly to Fib extension of 3.618. Usually when the instrument reaches the extension level of 3.618, then the corrective leg is either to 2.618 or deeper towards 1.618. And yes, after rallying in the upward direction, it has retraced exactly towards 1.618 and showing the signs of reversal. So it's an amazing bullish setup. Now moving to daily, I'll again change it to a line chart here. Now notice on the daily frame, we got buyers back because it has printed bullish divergence even on the last two lows based on MACD lines. The wider divergence coming on histogram, it has created higher high formation. Now we can expect some short-term correction here and continuation to the next level of 2.618, which is going to be the price of 2.93. Currently it is at 2.30, and I'm going to apply Fib extension again on the daily frame. I just need to zoom out a bit and I'll be applying Fibonacci extension here on the second bullish rally. So we have already applied Fib extension on the first one. This is the first one I'm talking about. Now I'm going to apply on the second bullish rally. covering the third leg and the fourth leg. So this is the start of third leg to the highest point of third leg and connecting to the higher low. Again, I'll be using a different color, green one here. So the overlapping lines are creating the magnet zone. This is the magnet level. So this is going to be our target, 3.82 or 3.80. So right now the current market price is 2.31. So if you buy stacks around 2.31, let's calculate our risk and reward. Long position at the current market price, maintaining a stop loss below 1.61 and aiming at 3.8. So easily you can make 2 times. Now moving to 4-hourly chart, again I do not see any signs against. We got bullish divergence. Even the wider one, we have completed the higher high formation. Join the buyers, so you can split your entry. You can buy whatever amount you are willing to buy, whatever amount you are willing to allocate to this crypto instrument. You can buy half of that at the current market price, and you can put a second buy limit order around this level. So this is going to be the price level of 2.10 with the current market buy at 2.34 or 2.35. Promising setup, and you can make at least 2x. Now this is the lower time frame, 1-hourly chart, and it's 100% bullish. After completing this bullish cycle with bearish divergence on the top, first leg down. Now it is just making a consolidation pattern, maybe a triangular pattern. It may come down for a deeper retest. Nothing to worry. Higher time frame is definitely bullish, so it looks bullish on all time frames. So these are the instruments which I've covered for the upcoming week. I hope they will add value to your trading plan and have a profitable trading week ahead. Bye bye.